For centuries, the idea of a canal through Central America has fascinated the world. Explorers and visionaries alike have dreamt of a passage that could connect the Atlantic and Pacific Oceans, reducing the perilous journey around the southern tip of South America. This dream has been a beacon for adventurers and a tantalizing prospect for traders. The Panama Canal made that dream real, transforming global trade. It became a marvel of engineering and a pivotal artery for maritime commerce, drastically cutting travel time and costs for shipping routes worldwide. But what if there were another canal, bigger, deeper, and built for the supertankers of today? The ever-growing size of modern cargo ships demands a new solution, one that can accommodate the giants of the sea. Enter the Nicaraguan Canal, a proposed 278-kilometer waterway, over 3 times longer than Panama's, designed to handle ships too large for any existing canal. This ambitious project aims to revolutionize maritime logistics once again. The project promises to double Nicaragua's GDP, create thousands of jobs, and stimulate economic growth. It's seen as a potential game-changer for the nation's economy, offering a path to prosperity and lift the nation out of poverty. For many Nicaraguans, the canal represents hope and a brighter future, bringing opportunities that were previously unimaginable. Yet from the start it's been dogged by doubts about its finances, environmental risks, and the potential displacement of communities. Critics argue that the environmental costs could be too high, with significant impacts on local ecosystems, and the true motives behind it. Questions linger about the transparency of the project and the interests of those backing it. Is it driven by genuine development goals or hidden agendas? Is it a bold leap for global trade, or a geopolitical gamble? The canal could reshape global shipping routes, but it also raises strategic concerns among world powers. As of late 2025, the Nicaraguan Canal remains a colossal dream, suspended between ambition and reality. Its future is uncertain, teetering on the edge of possibility and the challenges that lie ahead. The modern Nicaraguan canal story began in 2013, when a bold and ambitious vision captured the world's attention. Nicaragua, a country long overshadowed by its neighbors, suddenly found itself at the center of a global infrastructure dream, a canal to rival Panama, promising to transform the nation's fortunes and reshape international trade routes. That year, the Nicaraguan government granted a sweeping 50-year concession to Wang Jing, a relatively unknown Chinese telecom tycoon. Wang, who had made his fortune in the world of communications, was suddenly thrust into the spotlight as the man who might change the course of Nicaragua's history. Through his company, HKND, Wang was given extraordinary powers, not just to build and operate the canal, but also to expropriate land, manage ports, and even develop related infrastructure. The scale of the project was staggering, and the legal authority granted to HKND was almost unprecedented in the region. The project's launch was marked by a grand groundbreaking ceremony in 2014. Nicaraguan President Daniel Ortega and Wang Jing stood side by side, surrounded by flags and hopeful crowds. There were promises of tens of thousands of jobs, billions in investment, and a new era of prosperity for Nicaragua. The canal was slated to open by 2019, and optimism was in the air. But despite the initial excitement, the momentum behind the project quickly faded. Construction sites that once buzzed with activity soon fell silent, and the grand vision began to unravel. In 2015, disaster struck. The Chinese stock market crashed, wiping out much of Wang Jing's fortune almost overnight. With his financial resources depleted, the flow of investment into the canal project dried up, leaving the ambitious plan in limbo. Construction ground to a halt. Not a single kilometer of canal was ever dug, and the untouched Nicaraguan landscape stood as a stark reminder of what might have been. Yet, the original concession remains in place. Now, with Nicaragua having shifted its diplomatic allegiance to Beijing, speculation is growing. Some believe that the Chinese government itself could step in, reviving the project on a scale even greater than before. The fate of the Nicaraguan Canal hangs in the balance, caught between the memory of a failed dream and the tantalizing possibility of a state-backed resurrection. For now, uncertainty reigns, and the future of this colossal project remains unresolved. Around the world, governments, investors, and ordinary people are watching closely, waiting to see if this stalled project will rise again, or fade forever into history. Supporters say the Nicaraguan canal's size is its greatest strength. Designed for the world's largest ships, it could future-proof global trade. The project promises tens of thousands of jobs and a massive boost to Nicaragua's economy, with new ports, free trade zones, and tourism. Proponents argue it would ease congestion at the Panama Canal, providing a vital alternative for global shipping. A second canal could increase resilience, lower costs, and offer shippers more flexibility. They claim environmental and social impacts can be managed with modern technology and fair compensation. For backers, the canal is a transformative opportunity, one that could lift Nicaragua out of poverty and reshape world trade. Critics, they say, underestimate its potential and overstate the risks. Environmentalists warn the canal would cut through Lake Nicaragua, the region's largest freshwater source, threatening rare species and water quality. Oil spills, invasive species, and sediment disruption could devastate the ecosystem. Tens of thousands, many from indigenous and farming communities, face forced displacement, with inadequate compensation and little consultation. Protests have erupted, fueled by fears of lost homes and livelihoods. Experts question the technical feasibility. Digging through seismically active terrain and managing massive earthworks pose huge risks. The 100-year concession to HKND, with little oversight or transparency, has been called a modern form of colonialism. Critics argue Nicaragua's resources and sovereignty are being traded away, with the public bearing the risks. The canal is more than an economic project, it's a geopolitical flashpoint. A Chinese-controlled canal in Central America would challenge U.S. influence and give Beijing a strategic foothold near the U.S. border. The canal's depth has sparked speculation about military uses, including passage for submarines and aircraft carriers. While officially denied, the potential for dual use is a key concern for Washington. The project fits China's global ambitions, echoing its Belt and Road Initiative and desire for secure trade routes. The U.S. has voiced concerns about transparency and environmental impact, but the real worry is China's growing presence in the Western Hemisphere. Whether built or not, the canal symbolizes China's rising power and willingness to challenge U.S. dominance. The biggest question, where's the money? The canal's $50 billion price tag dwarfs Nicaragua's economy. Wang Jing never revealed his investors, and after his fortune collapsed, the project's finances looked even shakier. Major Chinese banks and companies kept their distance, partly due to Nicaragua's former ties with Taiwan. Analysts doubt the canal could ever generate enough revenue to justify the cost, especially with Panama as a competitor. Many believe only direct Chinese state backing could revive the project, shifting its purpose from commercial to strategic. Now, with Nicaragua aligned with Beijing, that possibility is real. The canal's future may depend on whether China sees it as a geopolitical asset worth the investment. The question at the heart of the debate is simple, yet profound. Does the world actually need a second canal to connect the Atlantic and Pacific Oceans? With global trade volumes rising and supply chains under constant pressure, the idea of building a new waterway through Nicaragua has sparked intense discussion among shipping experts, economists, and policymakers. Supporters of the Nicaragua Canal argue that the ever-increasing size of cargo ships and the relentless growth in international trade will soon push the Panama Canal to its limits. They claim that congestion and delays are already becoming more common, and a new, larger canal could relieve bottlenecks, accommodate the next generation of megaships, and provide a crucial alternative route for global commerce. On the other hand, critics point out that the Panama Canal's 2016 expansion was specifically designed to handle most of the world's shipping needs, including many of the largest vessels afloat today. They argue that ultra-large container ships, while impressive, still represent a small fraction of total maritime traffic, and that the vast majority of ships fit comfortably through Panama's new locks. The proposed Nicaraguan route is not only longer but also more challenging in terms of geography and logistics. This means ships would face higher fuel costs, longer transit times, and potentially more complex navigation, factors that could easily erase any savings from carrying larger loads. Furthermore, most major shipping lines have already invested heavily in fleets specifically sized for the Panama Canal. Switching to a new untested canal would require significant changes in logistics, fleet composition, and operational planning, risks that many companies are reluctant to take without a clear commercial advantage. Realistically, only a major disruption at the Panama Canal, such as a prolonged closure or severe capacity constraints, or the promise of substantial subsidies from a major backer like China, could tip the scales and make the Nicaraguan canal a truly viable commercial alternative. As a result, the shipping industry remains deeply divided. Some experts foresee a future where a second canal becomes essential for global trade resilience, while others dismiss the project as an expensive solution in search of a real problem. For now, the commercial case for the Nicaragua Canal remains highly uncertain, with many questions still unanswered and the world watching to see if the need will ever truly materialize. As of late 2025, the Nicaraguan Canal stands at a crossroads. If China steps in, the project could be revived, transforming Nicaragua's economy, but at the risk of debt, environmental damage, and lost sovereignty. The country could become a pawn in a new era of US-China rivalry. If the project remains stalled, Nicaragua avoids upheaval, but misses a chance at economic transformation. For many, that would be a relief, protecting Lake Nicaragua and sparing communities from displacement. For others, it's a lost opportunity. Whether built or abandoned, the canal's legacy will be profound, a symbol of ambition, power, and the limits of mega projects. The world is watching to see which way the water will flow.